47 down payment assistance, like grants, whatever, were issued in 2025. So
Okay.
47, and you're looking at, as how many people probably applied. Actually don't know. I'm trying to get that number. So I was about $8 million distributed through that fund. But the thing is that you have to make under $90,000 to qualify for this. So, when you're looking at, median home prices at around like 980,000 or whatever it is, nobody making $90,000. If you have two people earning $90,000 each, they're not going to be able to afford it.
Hello, everyone. Rick Albert here with another episode of The Key to the City of Angels. I'm super excited to have Natalie Campisi here. Thank you so much for coming on. And you're a reporter kind of for the real estate kind of industry. So kind of talk about what you do and how you got into this space.
So I started at Bankrate almost 10 years ago, and I started covering mortgages and housing for them. I had like a weekly mortgage rate forecast video that got pretty popular over there. And then I moved over to Forbes and was their main reporter for housing and mortgages there. And so I've been kind of doing this for a while. I was reporting pre-COVID, during COVID, which was wild,
Wild.
and post-COVID. I just really interested in all aspects of the housing mortgage industry, and specifically LA. I live in Los Angeles County, so this is near and dear to me.
Nice. Okay, so let's kind of just jump into it. What have you been seeing? Like, especially because like a lot's changed, and I've noticed a bigger change since probably obviously 2022 when rates started going up, but really in the last
Mhm.
year and a half, we've all been kind of feeling it. So I'd be kind of curious to get your take.
Well, housing, as you know, is super local. So, like,
Right.
speaking of like LA, Los Angeles, well, we're seeing some interesting things because it's definitely a change from what was going on during COVID, where people were buying anything and everything for a lot of money. I
Right.
think the appetite is still there, but we're seeing people being much more cautious. And we're seeing it's like a tale of two, you know, buyers and sellers. We're seeing really competitive homes, competitively priced homes get snapped up very quickly. And we're
Mhm.
seeing maybe poorly priced homes lingering longer. So I think that's what we're seeing, that people want to buy, but at the right price, not like they were buying during COVID. And obviously, I think that the jobs and the employment situation is really affecting this, especially in LA. I was looking at the numbers, and it's pretty startling to see like the finance sector and the movie industry sector have really taken a big
Yeah, for
hit.
sure.
And yeah. So, and that one other thing I thought was pretty interesting is that condo sales are down, which is usually the entry point for, for first time buyers, and those are shrinking. And so, yeah.
Yeah, the condo market has been hit hard, right? Because we're
Mm.
seeing HOA dues. Like I actually showed some townhouses recently. HOA dues were like $750 a month.
I, I mean, what?
Yeah,
What's,
right.
what's
Well,
happening?
a lot of it has to do with those balcony inspections that were required, and now there's
Right.
all this extra work. And COVID hit, so everyone's water bill skyrocketed. Like
Yep.
there's a lot of like expenses that just weren't anticipated. Is what I've seen because I used to own a condo in LA, and then I
Okay.
ended up selling it. And part of the reason was like I was seeing some of this stuff, and there's nothing like I was like, I think now's just a good time to sell. There wasn't anything bad or anything like that. I was just like, between that and the eviction moratoriums, all that. So it's just, but yeah, I've seen condos been sitting, and in certain markets, at some point you're like, it's the same price to buy a house.
Yeah. Yeah, that's exactly it. It's just the HOA fees are sort of making it impossible to justify. It's a $700 a month HOA fee is like, half the mortgage, or, a quarter of the mortgage, maybe, depending.
Right. In some of these markets where it's like it's already costing 700,000, 800,000 for some of these townhouses or condos, it's like, okay, could I move to a different area?
Right. Yep.
and
Absolutely.
buy that. I actually have a townhouse listing coming up, and it's
Okay.
like the HOA dues are high. So I'm like, well, we actually have to price it competitively
Hmm.
because like these, you could buy a house,
Yeah. Yep. Yep.
you
Yeah.
know?
Something's got to give there for sure. Yeah.
Right. And so then
And yeah.
you're mentioning buyers being like extra cautious, which I'm seeing the same thing. They're just
Right.
like almost like over analyzing it.
Hmm.
But are there anything specific, like, certain stress levels have been changing? What has been happening? Like, why are they more stressful other than just the payments, right? Because they can just shift to a different neighborhood, they can buy something different, but I feel like there's more going on.
Well, I think a big thing is the employment insecurity. I think that we're seeing that. I think the we're seeing unemployment is not the first of all, the unemployment rate in LA is 5.3% or 5.2%. The national unemployment rate is 4.3. So
Interesting. Because of the
that's
entertainment industry.
the entertainment industry and also the financial industry has been hit hard. That's nationally, but also in LA. So when you have, I mean, you look at journalism, I mean, it's just been massacred, so you have people that are PhDs, they have MBAs, they are out of work and now they're competing for the same job, but making 50, 60, $70,000 less than they were. I mean, it's really hard for people kind of mid-career who have been laid off to recapture that income that they were making. And that's a big
Mhm.
thing we're seeing right now in employment. So you're seeing people that are being very conservative because they know that, especially single person households where they don't have that dual income,
Yeah.
if they get laid off, that's it. And that AI has really kind of spread like a virus. So you've got people that were engineers and things like that that are no longer employable the same way they used to be.
It's funny. I was talking to someone she's in her early 20s, and
Hmm.
like she's gonna go get her master's to become a teacher, but in the meantime she's taking on, like, I think she's working like a hospital, kind of like a receptionist. I'm like,
Yeah.
just make sure it's not a career because
Yeah.
that's gonna get taken over.
It's
Like,
true. Yeah.
it's wild.
It is wild, and it's just happening so quickly. I mean, my husband's in the entertainment
Mhm.
industry, and he's seeing friends leaving LA. They just can't afford it. I have friends that are been written on all kinds of TV shows and things, and they've moved to Canada. They've just left, and they're trying to make a career from other places with the connections they built here, but they
Mhm.
can't afford to be here anymore. And yeah, so that's the sad reality. And then we're also seeing international investors leave, which you've probably noticed. So
Yeah,
that's kind of also affected the market here.
but that's probably more the luxury market though, right?
Yeah, definitely the luxury market,
Yeah.
which is, not a small chunk of LA real
No,
estate, yeah.
that's a lot of transfer tax.
Yeah, yeah,
Like,
yep. I
right?
know.
I mean, that's a
Yeah,
lot of money that's not moving.
yep, yeah.
Now, is that because of Measure ULA?
I think so. Yeah, I think so for sure. It's just not as appealing to them. They can go take their money anywhere else and, get good returns. So why deal with this? Yeah.
People have been asking me what's going on. I'm like, I think what's happening is in California and LA, we're notorious for having very big egos.
Hmm.
And I think that's really biting us in the ass. I think
Yeah.
it's like, oh, Hollywood would never leave, or
Right.
development's not going to slow down. And
Right.
people are like, yeah, no, no, it can.
It can. It can and it will. And yeah. And why not? If you're looking at, movies right now, why are we going to spend all of this money in LA when we can make it for a fraction of the price? I mean, this shocked me was that there's a game show called The Floor. I don't know if you've heard
Okay,
of
I've heard of
it.
it. Yeah.
Okay. And it is shot in it's shot in Greenland or something. I don't know. It's shot somewhere else. There's like 100 contestants or something ridiculous. They fly them all out because it's cheaper than to shoot in Burbank. It's like
Yeah.
it's boggles my mind. And so, like you said, there's it's like LA politics and California politics have not caught up to the reality of what's going on.
Yeah.
And it's scary because we have to move faster than how we're moving. We just cannot afford to go through this, tremendous bureaucracy when we see people leaving left and right. People can't, we have people that have been in the industry for 30 years, are great craftspeople, are now driving Ubers, and they're living with 3 people just to try to make it work. It's untenable.
Yeah, I remember it was on Instagram. Karen Bass had posts like, "Oh, we were able to save Baywatch and bring it here and do all that." And all these people for the entertainment industry are commenting like, "Yeah, you're too late. You're too late. You're too late. You're too late.
Hmm. Yeah.
Way, way too late in the game."
Yeah. Yeah. It's going to take a massive, I think, extreme policy changes and
Yeah.
incentives to help lure some of this industry back. And we've also lost so much of it to AI. So there's also that situation we're dealing with. So it's, yeah.
Oh yeah, I wondered that. It's like, okay, do we need 100 editors or do we need
Mhm.
like five?
Yeah, yeah, yeah.
Yeah.
It's interesting. We'll see what happens. I think that all is not lost. I think we're going to see smaller movies maybe make a comeback, but hopefully we can you know, make it more affordable for indie movies to shoot here and have smaller productions, and
Yeah. No,
and
that's fair.
yeah.
So then what are like because you're talking to all sorts of people much more than I am. So for like the economists and like industry executives, what are they saying kind of behind the scenes?
As far as like as
Just
far as like the industry, as far as like
like the
the
housing
industry,
market, like because we're seeing all these jobs potentially being lost or being
right?
shifted over. So are there certain data points that's kind of driving certain conversations?
Well, I think one thing we're seeing is that we need to, obviously build more. That's a
Right.
big thing. ADUs are being pushed a lot more. We just don't have the inventory. So I think that's why you're seeing, like, do we, how do we make more remote locations appealing? I live in Lancaster, which is in LA County, but,
As far north as you
relatively
can get.
as far north as you can get. It takes me about an hour to get into town. So, like, an hour to get from my house to, like, Burbank, let's say,
Hmm.
which, it take an hour to get from Burbank to
To
Venice.
Burbank.
It's sort of like all relative.
Right.
But, like, now they're pushing for this, like, high speed transit, to make it more appealing, to live here. I mean, it's night and day. You have inventory out here, but do people want to live out here? That's the other thing. There's infrastructure, there's inventory, it's got its problems. So, you know, within Los Angeles, the big problem is inventory, and also and with that comes all of the regulations. So developers, they don't see they don't see the return. For example, condos, we're talking about that. As far as, like, that's a great way for first time home buyers to get into the housing market. Developers don't want to build condos. It's just not worth it for them. They'd rather build apartments for rent. So
Mm.
that's where developers are putting their money. They're not building condos and townhouses to sell. They're building apartments. So, you have a renter economy, which is huge here, and it makes it harder for people to get into home ownership.
I always wondered as like, and I had dug into this a few years ago, where there's all these like fourplexes in LA, and I'm
Right,
like, what if we just converted those to 4 condo units,
right, right.
right?
Yeah,
Because your
yeah,
HOA dues could be 200 a month,
yeah, yeah,
and you're in the heart of the city. You pick it up for like, I don't know, 2 million, and you
yeah,
sell each one for 800, and it's
yeah,
just really paperwork.
yeah, yeah, exactly. Yeah.
Like,
Well,
and
I
there's
know.
money to be made.
Yeah, there's money to be made. It solves a huge problem. I think that we're just not, I feel like housing here and the people that are in charge of housing are not I don't see that they move as quickly as they could. And I don't know if that's a matter of bureaucracy. I know that LA has, more regulations than a lot of other places. Look at the South. It's much easier to build down there.
And
That's why
prices have gone
there's
down because of it.
yeah, it's just, so I think that, we're seeing, with like the fires and everything, that they're trying to speed up housing, construction, which is good, but it shouldn't take a massive wildfire for this to happen. And
Yeah.
it can be frustrating. One of the things I'm looking to, for one of my stories, is just staffing, is housing the staffing for the housing department in LA County, and how many people are on staff and what they're doing. And just curious, like, what's going on, because we're in our own crisis. The US is in a housing crisis, but we're in a crisis too. And so I'm curious.
It's funny. One of my first jobs out of college was like an assistant project manager here in LA.
Okay.
We would go buy foreclosures at the courthouse steps. We fix them up and sell.
Okay.
Oftentimes we had to pull permit history. And I remember
Okay.
going to the city. She had to fill out a form on a yellow piece of paper, hand it. Guy was named Brian, super nice. And I
Okay.
ended up getting a system down where like I could give it to Brian and like, hey, I'll be
Okay.
back in a few hours. Right? So it worked for both of us. He didn't
Right.
have to prioritize me. I didn't have to literally sit there and wait.
Right.
Then eventually time would go by and he's like, actually, I need you to wait. They've
Oh
changed the
no.
rules. So here I am sitting, paying for parking, and I'm like, what? This is wild.
Yeah.
And
It
now
was.
it's like most of it's online, but now it's like 50-50 if it works. But
Okay.
you're right. There's tons of inefficiencies
Yeah.
going
Yep.
on. And it's like, it can be really frustrating.
Yeah, yeah. And I think that's where you see a lot of developers just don't want to deal with it, so it
Because they
kind
don't
of
have
feeds
to.
into, they don't have to. There's plenty of people outside of LA and California that want to buy homes, and they can, mark it up, and they'll still make, good return on their investment. So yeah, I think that we just need to really like see where we can cut some of this bureaucratic red tape so that we can expedite some of these things, and also like, add to the inventory in a meaningful way.
Yeah, I agree. And I'm one of the people who's like, my last home wasn't had an ADU on it. We built out the ADU. It was the best thing
Yeah,
we ever did.
yeah,
Now it's like, oh, you can build 4 homes on a lot.
yeah.
SB9. It's like, do I like that? I get it conceptually, but do I really want to live in a neighborhood where I paid $1 million for a home and now I have two fourplexes next to me?
I know. I mean, that's the thing. It's really, it's difficult because, I think the urban planning here is, leaves a lot to be desired.
Sure.
And, we're not building. I mean, LA is so enormous, and it is so car heavy, instead of
Yeah.
building kind of little mini neighborhoods where you could have a bodega, you could have like a little, maybe a little apartment building, some
Yeah.
houses, and it really
Like
feels
mixed use.
walkable, mixed use, and it's not, kind of like you were saying, you have with this, $1 million house, which in LA is, a
It's a starter
thousand
home.
square feet. Yeah, it's very
Right.
small.
It's a starter
It
starter
needs a
home.
lot of work. You're not like, I don't think you have your own parking space for $1 million.
Right.
It's like not good. But it's just, it is. It's like, I mean, look, NIMBYism is real. I have many friends, homeowner friends in LA County, not
Yeah.
out here in Lancaster, or LA, the city of LA, not the county, which is like two different worlds, but who are, they're all for like more affordable housing, but just not in my
Yeah.
neighborhood. If that's okay. And and you can't blame people.
Right.
It's you really can't when you're there are people that are. I mean, I have friends who have bought $1 million homes, and with that $1 million home, they know I am not taking a vacation for the next 3 years. This is going to
Yeah.
be like maybe 60%, 70% of my salary. This is not
Yeah.
like, these are working people who, yeah, they make good money, but they can't afford to lose on real estate. They can
Mhm.
afford the house, but they can't afford to. So, they put their blood, sweat, and tears in this, buying this home. Yeah, should they be living next to, like you said, fourplex or whatever. It's tough.
Yeah, and maybe and so my theory is city council, because the majority of Angelinos are renters, that if
Right.
you're city council, it's all about votes. So
Right.
they're going to do whatever they can to help the tenants, even though the real answer is how do we get them into home ownership?
Right.
Right? It's like we
Absolutely.
have to shift
Yeah.
that conversation, but when you
Yeah.
have rent control and rents can only go up between 1% to 4%, and
Yeah.
you actually there's a big demographic. I don't have the exact number, but I'm sure there's a very big demographic of tenants who actually are qualified to buy a house. But they're just like,
Yeah.
why? My rent's super
Yeah.
low. There's no incentive. There's no median testing for rent control.
Yeah. 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 That's actually really interesting. I'm gonna write that down because that would be a really interesting story. Like how many renters, would qualify for
Yeah.
housing and, just don't because
Because
yeah,
why
they
would
have
they?
like a great price. Yeah.
I
Yeah.
have a friend of mine that lives in Century City, amazing walkability.
Yeah.
He has a roommate. His portion of the rent's like $1,100 a month.
Yeah.
And I'm
Yeah.
like, dude, why aren't you
I know.
buying? He's like, well, first of all, it would force me to go into the valley based on my income, which
Right.
he didn't
This is
necessarily
true.
want to do. And I'm like,
Yeah.
Okay. He's like, but also my rent's super cheap and I can walk to
Yeah.
work. I'm
Yeah.
like,
Well, that's the thing with LA. It's like that's the other thing. It's like, it is it's a car town. So,
yeah, very much so.
if you have to live in the valley and your work is in, Century City, that's a big lifestyle change,
Mhm.
and
Very much
Century
so.
City is very expensive. So it's not like living in like Manhattan or something where you can get on a subway and like, it's not really a big deal if you're like, I don't know, in Brooklyn and you work
Right.
midtown or whatever it
It's
is.
more
It's like,
efficient.
yeah. Yeah. And it's a different lifestyle too. I mean, living in the valley is not the same as living in Century City.
I
It's
agree.
just, yeah,
And to the valley's credit, you have the village in Woodland Hills.
yeah,
You can like find it, and
yeah,
it's obviously not going to be the same, but like
yeah.
they're trying.
Studio City, yeah, has kind of
Yeah,
like a vibe, I think,
between us, like, I don't really get Studio City. I like Studio City. I've
Yeah,
sold in it. I like Tahunga Village, like
yeah,
the little shops and restaurants. But
yeah.
like a little hidden gem for Ventura Boulevard, it's all about Tarzana.
Yeah, Tarzana is cool. I feel like Studio City has. I love Burbank. I know I'm
Yeah,
like a 90-year-old woman at heart. I think, but like
no,
I think Studio City has like a kind of LA feel to it. You don't? Do you
it's
get that? Like a sort
yeah,
of
it's becoming
a
more of like LA vibes.
yeah. It's got like the. I think it's got the Erewhon and it's got
Yeah,
like
it does
you
now.
know
Yep.
yeah the it's the private school over there.
Oh,
The
Campbell.
not Campbell. It's the other one that's like
Oh,
they're like in a big.
Harvard Westlake.
Yeah, there's like
Yep.
the tennis court battle. I don't know if you're familiar with that. I
Yeah.
used to play at those courts, and like I was just like the kids would come in, and all the adults would be like, "Get out of here!" It was just so anyway. So it's got all that. I feel like that's very LA coded.
Yeah, very much
Like,
so.
yeah,
I mean, right?
yeah,
People were getting priced out. They were getting priced out of the West Side, so they're coming
yeah,
over. I remember it's like
yeah.
everything was always about being south of Ventura Boulevard. Now it's
Right.
like meh, north,
Yeah.
south, whatever.
Whatever. I mean, yeah. I don't know. It seems yeah. So yeah, interesting.
Yeah, no, I agree. No, I always like because my first condo was in Tarzana,
Okay.
and I when I saw it, I was like, Tarzana's kind of like the redheaded stepchild. Like people are like,
Right.
oh yeah, we're totally living in Encino or Sherman Oaks or even Woodland Hills. I'm like, what about
Yeah.
Tarzana? Like, I didn't even think about Tarzana.
Yeah.
I'm like,
Totally.
dude,
Yeah.
you drive right
Yeah.
through it.
I know. No, I know. I know. It's funny.
But I bought it in 2015. I owned it for 7 years, put about 25,000 into it, and I
Okay.
sold it for double.
Wow. It's amazing. Yeah.
Right?
Yeah.
It's like
Amazing. You bought it at a great time.
fair. I
Yeah.
did.
Yeah.
And it was a heavy fixer by like condo
Right.
standards. The previous owner
Okay.
had lived there for over 30 years and was a heavy smoker. She lived there when it was a apartment building. She
Okay.
just bought it when they converted it to condos.
Right. Amazing. Okay. Okay. How
Right?
did you get the smoke out? Do you just kind of like pull everything out and paint?
So what you first do is there's a chemical called trisodium phosphate.
Okay.
You just get it at Home Depot. So the guys just they scrub the walls. And
Oh,
then
wow.
there's the brand's called Kills,
Okay.
AILZ, and it's a primer paint, and they have one designed for nicotine.
Wow. Oh, I had no idea. Okay.
Yeah. So after like 2 or 3 coats,
It's like,
it was then we painted. Um, it,
okay.
but like it was a job, but we got it
Right.
done. So everyone else
Yeah.
saw it and was like, "This is disgusting." You
Yeah.
open the door and you could smell the smoke from downstairs.
Oh God.
And I looked
Yeah.
at it, I'm like, it's solvable.
Yeah. Yeah. A
You
little
know,
chemistry. Yeah.
right? Like,
Yeah.
luckily, I didn't have to tear out the drywall. That was my
Oh
biggest
yeah.
fear. That's
Yeah.
like the ultimate way to do it. Replace the drywall altogether. I'm like,
Right.
I'm not doing that.
Yeah. Yeah.
Not for a
Yeah.
$225,000 condo. I'll open up the
No.
windows.
No, I know. Although drywall is pretty cheap, but the replacement of it is
Yeah,
expensive.
and with the high
Yeah.
ceilings in certain
Oh
parts of
yeah.
it, it was just, nah, I'm
Yeah.
good, thanks. Let's just
Yeah.
scrub
Yeah.
the
Yeah.
walls.
Yeah.
So,
Yeah. It's good.
yeah, right?
Yeah.
Now, going into the buying, because there are parts, that are affordable, meaning below, we'll call it the median average. But there is like different like down payment assistance programs for buyers.
Right.
To be fair, most of my buyers, I don't think any of my buyers have ever used it.
No. No.
And
Mm,
from the listing side, I get those offers, but like
right.
there's so much red tape behind it.
Yeah. No,
It's like,
it's
oh, it's a
not.
45-day escrow. Oh, we need all this work done on the unit.
Yeah.
And I'm like, and because of that price point, you
Right.
typically get multiple offers. So it's like, why would I go through this dance when I can go over here? So I'm kind
Yeah.
of curious to see what you've done through some of your reporting about like the actual effectiveness of it.
Yeah. I was super curious about this because, first of all, the requirements are completely ridiculous. Like
Okay.
I have it written down here. So in 20, this is for LA County. So
Okay.
this
Fair enough.
includes, Lancaster and Palmdale, which, in case your audience doesn't know, like, I don't know what the median home price is in Lancaster and Palmdale, but it's probably around 450K,
Maybe on
maybe.
the small end, yeah. I mean, you're still seeing
Some,
like 500-600 ish. I mean, the average for all of LA County right now is pushing to about a million, 900
right.
to a million. Like it fluctuates depending on who reporting is. So yeah, you could be somewhere in that range. Yeah.
Yeah. So here it's like, so it's half of that. So it's like a broad, just so when you say LA County, that's a different world. But 47 down payment assistance, like grants, whatever, were issued in 2025. So
Okay.
47, and you're looking at, as how many people probably applied. Actually don't know. I'm trying to get that number. So I was about $8 million distributed through that fund. But the thing is that you have to make under $90,000 to qualify for this. So, when you're looking at, median home prices at around like 980,000 or whatever it is, nobody making $90,000. If you have two people earning $90,000 each, they're not going to be able to afford it. It's just
Fair.
without, yeah, it's just with, a normal down payment of like, most people, I don't know, most people I think pay like put down around 4 to 7% these days nationwide.
Yeah. A lot of my clients, so one of my sticks is like house hacking. So buying properties, renting by the room, renting another unit.
Oh, okay.
And so the whole point of that is to put the least amount down.
Right. Yeah, of course. Yeah.
Right,
Yeah.
to
Yeah.
increase your
Yeah.
cash on cash return, doing all
Yeah.
that. Yeah, I would
Yeah.
say on the buying side, most are under 20%. I mean, some of my
Yeah.
most recent ones, some were 20% or more. They're just high income earners.
Right.
But yeah, the FHAs, 5% down, 10%
Yeah.
down. Yeah.
Do you get a lot of FHA buyers or?
Yeah.
Okay.
With the FHA loan, 3.5% down, and then sometimes the rates are actually better.
Yeah. Yeah.
So
Yeah.
and you get, a little bit more debt, which you always have to explain to everybody. And I don't think
Mhm.
most real estate agents do, because I don't think they realize it. You're qualified based off your gross income, not your net.
Right. Right. Right.
And like, maybe I'm shooting myself in the foot. I don't care. But like I told you, like, you have to like look at it that way. They're not
Yeah.
taking, you take out money for retirement, your insurance, taxes, like
Yeah.
you
Yeah.
can qualify. Like when we bought our most recent house, we qualified for way higher than I would ever consider paying.
Yeah. Yeah. It's really, FHA loans are a great tool. The only drawback is that insurance that doesn't go away unless you
Right.
refinance. So
Hmm.
there's that, which I think is so unfair. I don't understand it at all,
I
because
agree.
the whole thing about the insurance is that they're risky people, but once you get to 20%, you're no longer a risk, but that doesn't go away like it does with conventional mortgages. So anyway,
And that to me is actually more effective policy that they could
yeah,
change.
yeah,
Right.
for
I see a
sure.
lot of policy where people are like, oh yeah, we're trying to get it to where you wrap in your closing cost. I'm like, so now they're over leveraging.
Yeah,
There's
yeah,
far better policies that could be pushed and changed.
yes, yeah, agree. I completely agree. Yeah, yeah, but yeah, no, okay, so that's interesting. Yeah, no, then so the down payment assistance, I don't feel like is a help in LA at all. In other places in the country, for
Sure.
sure, it is definitely a help. In LA, it is not a help, and I don't know why we even have that program, because, I
For
guess
both.
it helped 47 people. I would like to see those homes. That's
Well, to be,
maybe in Lancaster.
I mean, to be fair, like if I had clients that were on that program, the first thing I'd be doing is looking at homes that have been sitting on the market.
Yeah. Well, that's the thing. Yeah. Yeah.
Right.
Well,
Then
now yeah.
go
Yeah.
for it.
No, I was going to say the homes that we're seeing sitting on the market now are the overpriced homes,
Hmm.
because I think people still are thinking COVID mentality, and that's just not going anymore.
So I will tell you, and it's super weird. My last three listings, two of them took over 6 months to sell, one took over 2 months.
Okay.
They sold close to list price.
Yeah. Yeah, that's what's happening. Yeah, yeah, yeah.
It's
Okay.
not like, it was grossly overpriced. It was just
Okay.
like, so now to be fair, like one of them was a two-bedroom home,
Okay. Yeah.
right? Another one, 3 bed, 1.5 bath, really no part. Like they each had their own little nuances that made it trickier to sell. But it's
Right.
just like some of it is just a waiting game, which
Yeah.
never happened in the past.
Right, right. People really, I think it seems like what's happening now is like people are, it's such, we're seeing salaries decrease, and, people are unsure. And so they're not just buying whatever, that frenzy has died down. So you don't
Yeah.
have that collective fear. It's like, okay, I can wait, it's not like a big deal, but, they don't want, they're not, all these concessions and all the stuff we saw before, we're not seeing now. I'm
Yeah.
sure you probably haven't. Yeah.
Well, one of the things I don't think they're doing a good job tracking is actually the concessions. So, like,
Okay.
home prices are going up. But, like, for example, I have a client, helped him buy recently, FHA buyer.
Okay.
It was listed for like 897,
Okay.
897,000. We offered
Right.
900,000, 3 grand over, but I got him a
Right.
$38,000 credit up front to buy the
Okay.
rate down. He locked in
Yeah.
4.75.
Oh, great. Yeah. 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 That's awesome.
Right. So then it'd be interesting. So when we're tracking, I actually talked about this on the podcast. It was one of our first episodes with a realtor based in Memphis. And he's the one who brought it up. He's like, home prices are going up, but our sellers actually netting more money
Right. Yeah.
because of
Yeah.
the
Cause
factoring in these credits.
yeah, I know. Was reading that this was like people are just wanting more, wanting more from the seller. They just, and it's just it's not. I don't know. Would you can? It seems like, I don't know if it's a. Would you call this a seller's market, or I don't know. I don't think it's a
It's a
buyer's
weird
market.
market because
Yeah.
like the data is showing that technically we're in a seller's market, inventory's
Right.
low,
Right. Right.
but the buyer motivation isn't there.
Right. That's the thing.
Right.
Yeah.
So it's like
Yeah.
the buyers are there, they're just not
Right.
super motivated. They're like, I like it, but I can wait.
And
Or
rent is going down, right?
yeah, we're at a 4-year low.
Yeah. So, yeah, when you see rent going down, and also probably a lot of like, the thing with a house is like you're, especially in this market where it is, you're buying at the very top, it's so
Mm,
expensive, and it's not, we don't have the tech economy that like the Bay Area has right now. Is, am I going to be in LA for the next 4 to 5 years to see this house appreciate in value? It's
yeah.
like, is it gonna, is it a risk? Am I gonna buy now and then next year the whole thing collapses? And we are seeing like credit card debt is the highest it's ever been.
I read about that.
Wow, it is so high. bankruptcies are ticking up, even though it's harder to we're seeing foreclosures tick up slightly, here and
Yeah.
there, and not maybe as much as LA, but like around the country. And so there's just like those small, signs of problems. And we're also seeing people tap their 401ks. So people are, well, I've got money there. I might not have, I don't have family money. I don't have a big savings, but I've got money in my 401k. So maybe that's where I put it. And yeah.
In the credit card stuff, it was funny because like I saw something online that said like Santa Clarita actually had like some of the highest credit card debt. And I
Yeah.
sent it to a buddy of mine in Klein who lives in the area. He's like, I'm surprised. I'm like, well, keep in mind, like me personally, my credit card bills are high, but we put everything on the credit card because of the
Right.
points.
Yeah, sure. Yeah. Yeah.
So like I'm also kind of curious, like, yeah, credit card may be high, but because now more and more people are doing the points hacking, how much of that is like skewed?
Right. Well, we're seeing delinquency rates also
Got it.
rise.
Okay.
So we're
That's
also seeing
that's a different
people
stat.
not being able to pay their credit card bills. And yeah, we're seeing the delinquency rates go up, and we're seeing people, more people get, I don't know if you're seeing this, tapping their equity through HELOCs. So we're
Mhm.
seeing HELOC payments slowly inch up too. And that's a scary thing when you start seeing
It's
that. And
adjustable.
yeah, and more underwater mortgages. So
Mhm.
see that more in the South than here, but yeah.
My last house, I love HELOCs, but I
Yeah,
use it to leverage to buy more properties.
right, right. Yeah.
So my last HELOC we did in 2022. So
Okay.
like the rates were still fairly low. And I
Right.
remember I locked in 90% loan to value,
Okay.
4.75 fixed, interest only
Okay.
payments for 5 years.
That's great. Yeah, that's a great
Right?
HELOC. Yeah.
Yeah, you can't do that anymore.
Okay. Yeah.
And I've since sold the property, but one of my clients who had the same program, he's like, "Yeah, my 5th year's coming up, and now I'm gonna have to start paying
I
the
know.
principal." Like he
Yeah.
can afford it. It's not, but it's just more of like mentally. It's like, okay, it's kind of the same
Yeah.
issue that we saw on the commercial side when you
Mhm.
have those balloon payments every 5 years.
Right. Yeah. Yeah. It's something that people have to consider. It's just not like it was, and and these loan products are not bad or good. I feel like things are
Right.
sold as like it's bad or good. I mean, my first house, I used an adjustable rate mortgage, but mortgage rates were falling. So every month my loan payment
Oh,
was going
interesting.
down, and it was how I could get into a house at like 25, and I was able to refinance out. But I was like, oh, this is amazing, like it's cheaper this month. And so like, but it's so, yeah.
Yeah, it'll. What do you see as we kind of wrap this up happening over the next couple of years? Do you actually see, the market crashing? Are you seeing like what do you kind of predict?
I don't think the market's going to crash, because I do think that we're going to see a lot of trickle in money from AI and the North. And LA's a great city. It is a great city. I do think that we're going to see home values continue to slide. I don't think it's going to crash, but I don't think we're going to
A
see,
correction.
there's going to be a correction. It's not. So I think people who want to buy and who want to stay in LA, I believe that, a house can be a good part of a retirement plan. I've seen it in my own family. I've seen it, especially for people who just working people, they're not investors, they just want a place. If you think you're going to be here, I think this is a good time to start getting your finances in order and get ready and start preparing, maybe work with an agent. And
Yeah.
this is kind of what I'm looking for when the time comes. But it seems to me the signs are there, because I don't think employment is going to pick up for like the financial sector, for a lot of
Mm,
these white collar jobs. I think people that are sort of mid career or late-ish career, not retirement, but
yeah.
they're we're seeing those jobs go to the wayside. Middle management's getting cut. So there's going to be a correction in that sense too. So yeah, I think that that's what we're going to see with LA. And yeah,
Nice. All
it's
right.
kind of what I
Well,
see. But yeah,
I tend to think it's gonna that or flatline, but I think we are
right.
gonna see more and more concessions, probably most likely to buy down the rate. So it's
Yeah.
like, again, home values on paper are going to go up, but it's like, I
Yeah.
don't know if sellers are necessarily going to net more money.
Yeah, yeah, yeah. I think so, and I think that it'll be, well, we'll see what happens with mortgage rates right now. I mean, nothing is, I think we're seeing like such a shrinking credit box,
Yeah.
and I think banks are not wanting to give out money right now
Yeah.
because of what's happening with the economy. They see those little cracks, so it's very conservative. But maybe, as things with AI and everything sort of settle in the next 3 to 5 years, we'll see a shift again. Yeah.
Yeah. See where people are heading and all that.
Yeah.
I think in some ways I've been playing more and more with it. I could make an argument that AI is actually saving jobs
Okay.
because there are some mom and pop companies that just can't compete. So like with the Walmarts, the Targets.
Oh, right. Yeah.
So it's kind of like I either close my doors and now all 5 of my employees get laid off, or I
Right.
implement certain AI for like purchase orders,
Right.
accounting, all that,
Yeah.
and I can keep the jobs that I have.
Yeah. Yeah. That would be the best case scenario. I mean, we're definitely seeing more people start their own business now in the last few
Oh
years.
yeah,
That's
all
huge.
day.
I mean, yeah. So, yeah.
So we'll see.
Wait.
All right, we'll talk about it in a few years. I'll have you back
Yeah,
on.
for
And we'll
sure.
be like, were we right or were we so far off?
I know. I know. True.
Natalie, how can people get a hold of you?
I will just started a new YouTube channel. I would love for
Amazing.
you to drop by. I cover housing, but all kinds of other things. So yeah, it's my YouTube channel is my name, Natalie Campisi, and yeah.
All right. Well, thank you so much for coming on, and everybody listening or watching, thank you so much. And I'll talk to you guys next week. Want to keep unlocking the secrets to building real wealth in Los Angeles? Stick around for the next episode. Tap the video on screen to keep watching.